Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's continue with the analysis of the euro currency and start as usual from the daily time frame. You can see on the previous week market has shown a real bounce from the significant weekly and monthly support. This areas we have discussed is on our regular weekly researches. And although, as we have said on Friday, that the reason for that jump was mostly the speech of the Mario Draghi, and mostly I suppose, at least this is my point of view, that this splash was mostly emotional rather than is based on some fundamental changing in the problems of the Europe. But this recovery was relatively solid, and the hope of the bulls that that market still has an upward bullish momentum. Although on the longer term perspective, on the longer term charts, as the monthly and weekly situation hasn't changed much, so the bearish context is still hold there. On the lower time frames, on the daily time frame in particular, we see that context has turned to the bullish, because trend has turned on the bullish side. Market has shown nice recovery. You can see that the swing to the upside is greater than the previous swing to the downside. That is usually the initial sign of the potential deeper retracement or even reversal. Well, and we do not have any bearish patterns, no bearish directional patterns, so the direction of our trading will be on the long side of the market, at least in the beginning of the coming week. Still, although long-term charts suppose that market even could proceed to the 125-125.50 area, but in nearest future I suppose that we should count on some bounce to the downside, because market has hit daily overbought right here with this candle, and market stands FIB support at FIB resistance, nearest level of FIB resistance 123.11, and that is also the previous swing low, so also will be the resistance. And retracement usually deep, since this is the first swing after the significant move to the downside. When the market shows some upward initial swing, some retracement, it usually shows deep retracement to the downside before any continuation to the upside. I suppose that should be at least the 50% support of the swing to the upside. On the 4-hour time frame, we see the following picture. Trend holds bullish, and you can see that if market will show some significant retracement to the downside, trend probably will hold bullish as well. Although I will mark all FIB levels that stands in relation with this swing to the upside, these two levels probably we will not need them, since, as I said, market at overbought, and in that circumstances we should keep most attention to the deeper levels. The first level that I like to watch for is that level of confidence support. It's 122.20, 122.56. That also includes the weekly pivot point for the coming week is 122.50 area. Okay, and somewhere closer to the lower border of this confidence support stands the 50% support of this thrusting bar. That is also the support. The next level of support is 121.74. That is 618 support. If market will break this level, then 4-hour time frame trend will shift on the bearish side, but hope that if market still has some bullish momentum, it should hold above that level or this level. Well, currently on the 4-hour time frame I do not see any patterns that could trigger this pullback, but maybe on the hourly time frame, well, trend has shifted to the bearish side. On the hourly time frame you can see this bearish divergence right at the daily FIB resistance and daily overbought. So I have drawn this a bit not obvious bearish wedge that is forming currently on the hourly time frame. Probably maybe this pattern will trigger this downward deeper retracement on the daily time frame. But on the hourly time frame, I do not see anything more to speak about. This stop stands at 1618 extension of that swing to the downside. Well, maybe this pattern will trigger this move to the downside. So, that's been said. In general, the short-term context on the market currently is bullish, particularly the daily time frame. But although the market stand at daily resistance overbought, we should need some bounce to the downside before taking any steps to enter on the long side of the market. Since this is the first swing to the upside after the solid bearish trend, retracement probably will be deep. And there are two levels to watch for from that point of view: this confidence support area and the 618 support, the next level. If market will raise this thrusting bar to the downside and take out this low, well, by the way, this low stands precisely the weekly pivot support line. Okay, so if this will happen, then it will be a bit worry sign for the bulls, since this will be a bit not natural retracement if we see, at the domination of the bulls. Usually market should not show such kind of too deep retracement in this case. Well, that is our trading plan for the Monday. Keep an eye on these levels. Do not be hasty to enter on the long side of the market, since retracement could be really significant. Or control your risk and take only closest targets. Do not marry in position, since this thrusting move to the upside is a bit unstable, I suppose, because there is no fundamental changes in the economy of the euro currency, economy of the eurozone, I beg your pardon, and that is most emotional splash rather than some fundamental changing in sentiment of the market. That's why it's better to take the nearest targets, mostly trade on intraday charts, and control your risk.